Michael Burry, a hedge fund manager and investor, was born in San Jose, California on June 19, 1971. In 2021, he had a $300 million net worth and more than $100 million was under control. Burry, unlike many other well-known investors, considered finance to be only a pastime. His education had been in medicine. He received his education at the University of Los Angeles, obtained his doctorate at Vanderbilt Medical School, and completed his neurologist residency at Stanford. He was active in finance during his free time, which was not during his shifts. Hey people, welcome back to our channel. In today's video, we'll be looking at everything you need to know about Michael Burry's top 5 stocks. But before we start, make sure to subscribe to our channel, turn on the notifications, and most importantly, watch the video to the end. Let's get started. Even though several investors were willing to handle his cash by 2004, when he was already in charge of over $600 million, he declined their offers because he believed there might be a bigger chance out there. As a result, he studied numerous concepts, and in 2005, he started to investigate high-risk markets. Burry discovered that many high-risk mortgage loans were being given out that year after analyzing dozens of bonds connected to mortgages. This realization made him realize that many families would not be able to pay off the acquired debt, turning those assets into a ticking time bomb. With this, he anticipated the coming real estate crisis, which would start in 2007, and capitalize on it by convincing 2 sizable banks to issue CDIs that he would later purchase. Burry became known as a financial visionary thanks to the audacity of that decision, which earned him close to $1 billion at the start of the subprime credit crisis. In 2013, Burry created a new investment firm called Scion Management, in which he makes bets on undervalued sectors like gold, water, and agricultural land. Burry retired in 2008 and focused on managing his own money. The most practical option for the millionaire to invest in water is to raise food, utilizing water-rich places while transporting the produced food to areas with a lack of water for sale. One of the worst economic disasters of the 20th century was the subprime credit or real estate crisis of 2008. It was brought on by a lack of trust and credit risks in the US in 2007 that swiftly spread to other countries. Michael Burry saw that loans had been given out to borrowers who posed a significant risk of default, which would set off a domino effect of defaults and result in a financial bubble. Burry had also hinted at additional predictions, such as the fact that most businesses today are overvalued and that some businesses, even the most successful ones, may find it risky to enable the introduction of the sale of goods using bitcoins. On the other hand, he has predicted for years that water is the most valuable asset because it will eventually become scarce. As a result, he maintains investments that are focused on it in the hopes of gaining exclusive access to the essential liquid while also maintaining reserve assets like gold and assets with a large margin of safety like small technologies. Michael Burry has repeatedly referred to himself as a value investor and said that, like other famous investors like Warren Buffett, he bases investment decisions on Benjamin Graham's idea of margin of safety. The difference between an asset's final price and its intrinsic worth is known as the margin of safety. The goal is to invest in assets whose intrinsic worth surpasses the purchase price, with the expectation that in the medium or long term, the asset's price will equal or exceed its intrinsic value, a strategy that may be comparable to our own when we seize the chance to purchase a good at a discount. Number 5, the GEO Group Incorporated. According to Michael Burry, the GEO Group Incorporated is ranked number 10 on our list of the top 10 stocks to purchase. The company is situated in Florida and functions as a real estate investment trust. According to the most recent reports, Scion Asset Management had 2.5 million shares in the firm valued at $17.8 million at the end of June 2021. This amounts to 0.85% of the firm led by Burry's investment portfolio. When compared to the previous quarter, the GEO Group is a brand new addition to the portfolio. On June 8th, stock analyst Wedbush began following the GEO Group Incorporated with a neutral rating and a $7 price target. The ratings update was released by Henry Coffey, an analyst at the company. Number 4, Oventive Incorporated. On our list of the 10 greatest stocks to purchase, Oventive Incorporated is ranked 9th by Michael Burry. Oil and natural gas are developed, produced, and sold by the corporation. Its main office is in Colorado. According to the most recent statistics, at the end of the second quarter of 2021, Scion Asset Management owned 600,000 shares in the company. This is worth $18.8 million, or 0.9% of the portfolio. Comparing the first quarter of 2021 to this, the portfolio has added yet another new asset. On August 17th, financial consulting firm Bank of America resumed coverage of Oventix Incorporated stock with a buy rating and a $38 price target, pointing out that the company had a line of sight to accelerate debt reduction that will transfer value to shareholders. Number 3, Discovery Incorporated. Media corporation Discovery Incorporated is situated in New York. On our list of top 10 stocks to purchase, Michael Burry ranks its 8th. According to Scion Asset Management's regulatory filings, as of the end of June 2021, the company owned 855,084 shares of the media company. These make up 1.19% of the portfolio and are worth $24.7 million. According to the documents, the investment firm acquired shares of the business between April and June. On August 4th, the financial advice firm Deutsche Bank reaffirmed its buy rating on Discovery Incorporated's share, but decreased its $40 price objective from $55 in anticipation of the company's second quarter domestic network affiliate income declining. With 5.6 million shares valued at more than $165 million, New York-based investment company D.E. Shaw is the largest shareholder in Discovery Incorporated among the hedge funds that Insider Monkey is monitoring. Together with Walmart Incorporated, Alphabet Incorporated, and Facebook Incorporated, according to Michael Burry, one of the greatest stocks to buy is Discovery Incorporated. Asset management company Mayer Capital singled out a few equities in its Q1 2021 investor letter, and Discovery Incorporated was one of them. Number 2, corporate CVS Health. The healthcare company CVS Health Corporation is based in Rhode Island. On our selection of the top 10 stocks to purchase, it comes in at number 7, according to Michael Burry. At the end of June 2021, Scion Asset Management owned 525,300 shares of the healthcare company, or 2.1% of the portfolio. The value of these shares is $43.8 million. Burry increased the investment firm's holding in CVS Health by 32% in the second quarter compared to the first. On August 5th, financial advisory firm Deutsche Bank kept its buying rating on CVS Health Corporation stock while increasing its price target from $95 to $101, praising the company's strong second quarter results. With 8.5 million shares valued at more than $713 million, Chicago-based Harrods Associates is the largest shareholder in CVS Health Corporation among the hedge funds that Insider Monkey is monitoring. Michael Burry lists Walmart Incorporated, Alphabet Incorporated, Facebook Incorporated, and CVS Health Corporation as some of the best stocks to buy. Asset management company Vulcan Value Partners singled out a few equities in its investor letter of Q1 2021, and CVS Health Corporation was one of them. Number 1, Cardinal Health Incorporated. According to Michael Burry, Cardinal Health Incorporated is ranked 6th on our list of top 10 stocks to purchase. The business offers medical products and services. It's based in Ohio. At the conclusion of the second quarter of 2021, Scion Asset Management, under Burry's leadership, owned 857,700 shares of the business. These make up 2.35% of the portfolio and are valued at $48.9 million. When compared to the first quarter of 2021, the most recent data indicates that this is a new addition of the investment firm's portfolio. Cardinal Health Incorporated reported earnings per share of 77 cents, missing market expectations by 43 cents, and its earnings results of the fourth fiscal quarter, which were released on August 5th. With that, the video has come to an end. Let us know what you think in the comment section below to help us expand our community and attract more people who share our interests and are eager to learn. Please hit the like button and subscribe if you thought the video was interesting. Till then, bye.